Thank you, Josephine. Thank you for that introduction. Probably I'll start with a self-introduction by each of our panelists, so you in the audience can better appreciate the views and perspectives. My name is Weichou. I'll start with myself. I'm a partner and head of Asia with the StepStone group. So we are private markets manager with 80 billion AUA and over 330 billion in AUA. So that's we focus on fund investment, but we also do co-investment secondaries. So I lead a team here in Asia, doing fund research, fund investment, but also co-investment secondaries. So I'll turn to our co-panelists. Maybe I'll start with Thomas. Can you give a quick introduction?
Of course. Thank you so much. It's a pleasure to be here with this distinguished panelists. My name is Thomas. I'm Senior Investment Officer with the Asian Infrastructure Investment Bank, in short AIIB. And here I'm in charge of our private equity transactions, originating, structuring, and executing private equity investments, both in fund investments, but also co-investments and direct investments. And for those of you in the audience who don't know AIIB that well, we are a multilateral development bank with a mission to finance what we call the infrastructure for tomorrow. So basically, infrastructure with sustainability at its core. We started operations in January 2016 and have since grown to 103 members worldwide. We are capitalized at $100 billion US, and we are AAA rated by the three major rating agencies. Yeah, and again, looking forward to be here on the panel and to the discussion. Thank you.
Thank you, Thomas. I'll turn to Iqbal, who's with the Fajr Capital group.
So my name is Iqbal Khan. I'm the founding CEO of Fajr Capital, which is a private equity firm backed by sovereign wealth funds, Brunei Investment Agency, Khazanah National Berhad, Abu Dhabi Investment Council. We were created in 2009 with the objective of connecting capital from East Asia and West Asia, connecting the real economy with financial services economy. We've been very fortunate to benefit from the trade flows and deal flows between the Middle East region and Asia. We are an ESG Sharia compliant investor, and we invest both minority and majority type of investment deals, but always create a fit for purpose syndicate with partners which are suited for those investment opportunities. And I'm delighted to be here.
Great. Thanks, Iqbal. Finally, I'll turn to Tarun, who's with EG.
Yes, thanks for the opportunity. I'm Tarun Luthra, and I'm a senior investment advisor for equity investments at DEG. DEG, as some of you might know, is the DFI of Germany. So we're engaged in emerging markets exclusively as equity investors and providers of debt solutions for the better part of maybe 60 odd years now. Our equity business is relatively young, and it comprises about 35% of our overall portfolio, which give or take is about 9 billion euros, last I checked. Asia is our largest investment destination, certainly on the equity side, and we are present both across funds and direct investments. We work with a number of different GPs across the region, and we try and have a balanced portfolio construction representing all the interesting themes that we see in the region. Clearly, we invest for impact. We apply a strict ESG filter, but that has no compromise to our mind on the commercial returns we seek.
Great. Thank you, Tara. So let's kind of dive right into the topic of our discussion today. Of course, we'll touch on many of the themes that Josephine just introduced. So let's get the setting, right? Of course, when we say emerging market Asia, we mean geographically, within Asia, so several blocks, Southeast Asia, the block, India, China, and Middle East, right? So we have Iqbal here. But of course, in some groups, for instance, within our firm, we usually lump kind of Middle East with Europe. So it's Europe slash ME. I'm sure that's the case with other groups. But for this discussion, of course, Middle East is squarely part of Asia. And we'll touch on capital flow, opportunities, risk of investing in emerging Asia, and also the differences within the region. So I'll direct the first question to Tarun at DEG. When we, as the title suggests, the Asian century, when you use that term, people think of India, of course, as a place with great potential. Given its demographics, the GDP growth, the adoption of technology, the burgeoning middle class, for all those reasons. Certainly for investors, GPs and LPs included, over the past, I would say, 2 decades, there have been ups and downs, opportunities and risks. You are based there, you have a firsthand knowledge. Please share your views on the opportunity and challenges of investing in India, over the recent years, particularly, given how tech is developing, recently the COVID impact. So go ahead.
Sure. No, sure. Thanks for that. Look, when anybody talks about the Asian century, you're right. The first 2 things that pop to mind immediately is India and China. I think China and India in that order. And among the 2 countries, I think clearly China's elevated itself into a completely different plane vis-a-vis India, whether it is GDP, per capita GDP, just, even leapfrogging the US, if I'm not mistaken, is the #1 destination for FDI, just the size of its equity market. So clearly, that's a different story unto itself. And let me stick to what I could speak with a little more comfort, as you said, which is India. Maybe just a quick background, because for the audience, we're a $2.5 to $3 trillion economy. You take your pick, but half of it is still unorganized. That, of course, comes with its own set of challenges and opportunities. But I'll delve into that in a bit. But India really is a tale of 2 halves. There's, let's say, one half of the country which probably resides in the 6 to 7 metros, the 100 million people who probably have a per capita of about $15,000 on average. And then there's the long tail, which sort of just tapers off very quickly. So you can pretty well imagine when we're looking at from an investment landscape, it's sometimes very important to be able to traverse these 2 very different halves of India and accordingly, shape your strategy. So that's one, I think, which is really something worth considering. Just on the private equity side, I think, look, public markets were about 3 trillion in market capitalization. Private capital is about 250 billion, so about $250 billion. So it's still growing. So that in itself, just to sort of give you the context of the scale of this opportunity, is pretty massive, I would say, especially in emerging markets. If you think of it, China is probably the only larger opportunity. All of Africa put together might just be similar to India. Specific to the challenges and opportunities, look, I think it's important to sort of set the context. So if you look at what's happening on the private capital side in India, like most of Asia, India's business landscape has seen many prominent business families for whom, these businesses were built for perpetuity, for the next generation to take over. What's happening clearly is that, with COVID having, dare I say, accelerated that trend, a lot of these businesses are actually available. So we're going through a bit of a transition where suddenly you see over the last 2 or 3 years, buyout has emerged as a significant theme. That's certainly an opportunity that we're very excited about, even as a DFI in that construct, because we see just the transition of these very large businesses, which constitute a significant proportion of the economy as well, the old economy at least. That's something that we're very excited about because of the impact that you could have through shareholder stabilization, providing, having a large platform to grow off of and just create employment opportunities, which I think is one of the great challenges that India faces going into this decade and, dare I say, even into the future. So that's something to think about. And I think from the other side, you also mentioned, the other theme you mentioned in passing is the whole technology play, right? So clearly, if you sort of delve under the hood, you will see that India again, we're blessed with well-educated business and engineering talent. But what's changed over the last few years is the willingness for a lot of these people to actually embrace their entrepreneurial side. And equally, there's enough capital chasing these VC opportunities, just given the enormous scale potential of India. So if you think about it, these are maybe the two large opportunities. So growth capital probably still is a lion's share of the private equity market, but clearly VC and buyout on the two sides, if you see, of the value chain of private equity, those are the two opportunities which clearly look to us as something we should tap into. I hope I answered. Look, challenges, you mentioned COVID, obviously, but I let some of my co-panelists dwell on that. It's common across, so let me not get into that. But I think specific to India, maybe just to close my comments, I think governance is still something that we have to look at very seriously. Now, we have a saying in India, the promoter is always smarter than us, which I think we take to heart and try and apply that to our investment strategy as well. And not to mention the flush of global liquidity that's created buoyancy in valuations everywhere. So again, I think I'll close here. I'll take a pause. Let the others chime in as well.
Thank you so much. That's great. Before I move to the next topic, let me remind the audience. I was told by the organizer there is a poll going on, so please take time to kind of answer that very brief kind of polling question. It's regarding our allocation into Asia. And let me turn to Iqbal. So, I think one area when we talk about emerging Asia that we don't think about enough or a lot is the cross-border investment activity and the capital flow within Asia, but particularly between the Middle East and Southeast Asia. Not the capital flow from LP to GP, but also really on the deal side. Here when we say or talk about cross-border investment, is usually China, US, India, US, or Europe, Asia. So that's an area that does not get a lot of attention. But explain to us, because you are really, right in the middle of that. You've done a lot of cross-border deals, and you represent capital probably from the Middle East, also to Southeast Asia, South Asia. So what are the driving forces behind that kind of deal flow, that capital flow, and how big, or maybe you can share an investment case or two.
Thank you very much, Weichou. Can I just start first by saying that the Middle East as a terminology is new. Historically, we always looked at East Asia and West Asia. And when you say Middle East, middle of what?
Where?
And
Yes.
east of where? So I think East Asia and West Asia are being connected. We were very fortunate that we had LPs from Middle East, which is West Asia, Abu Dhabi Investment Council, MASIC, and we had LPs from East Asia, Khazana, BIA, Ministry of Finance, Hajj Fund. And the connection between real economy and financial economy was very important part of our investment thesis. Having been born after the financial crisis of 2008, we found the havoc which the world went through because of the lack of this connection between the real economy and the financial economy. So our investment thesis was to invest in companies in West Asia. So we invested into an oil services company called National Petroleum Services. We build a fit-for-purpose syndicate. We put our money and we got Epicorp, Fajr Capital, and others to join the syndicate. We expanded the business to Brunei, to Indonesia, in Asia. That expansion helped the oil services company to get diversification. Similarly, we found opportunities to invest into financial institutions in Asia and bring them back to the Middle East. The financial flows which happen between East Asia and West Asia take the form of technology investments, VC investments. Tarun talked about India. India in the last 3 years has got $130 billion of FDI into the VC space alone, a lot of it from the Middle East. Investment flows are also taking place both ways, East Asia and West Asia, into equity, into financing platforms. But more importantly, the portfolio companies are realizing that if you are based in West Asia, you can expand into East Asia. And similarly, East Asian companies are expanding into West Asia. This connectivity is very important at a time when investors, both in East Asia and West Asia, face a common challenge. And the common challenge is, how do you create alpha in a sustainable manner? How do you create an ethical alpha which makes the world a better place for all? And this leads me to Islamic finance as an industry, nearly $3 trillion, increasingly aligning itself with UNPRI, ESG movement to find a common platform for ethical investments, impact investments. And I see this as a big growth opportunity. And all these industries are looking for alpha plays both in East Asia, but in West Asia. Obviously, they are also looking for investment plays in Latin America, in Africa, in Europe, in America. But the thematic connection between East Asia and West Asia is a very important one. Obviously, we look at also the digitalization, business design innovation. We are historically much closer to East Asia from West Asia and vice versa. So if innovation, either in business design or a tech play or digitalization has worked in East Asia, the chances of it being appropriate and adequate for West Asia is very high, and vice versa as well. So today, the global innovation which is taking place is no longer just localized. It can migrate across borders and where there is an affinity. So we see a lot of these opportunities. We invested into an education company, GEMS Education. We expanded this to Singapore, to Malaysia. And though this was a company headquartered in Dubai, those kind of cross-border migrations are important case studies for the increased connectivity between East Asia and West Asia. Thank you so much.
Great. Thank you, Iqbal. Let me turn to Thomas. So from the vantage point of a multilateral bank, kind of recent, right? Less than 10 years old or maybe 10 years old. What do you see as the secular trends in Asia and how these translate to investment opportunities for you and for the other GPs?
Yes, thank you. And then just a small correction. So actually, we just had our 5th year anniversary. So indeed, we are a very new player here in the region, but with large ambitions, of course. If I may, and I'm coming to these secular trends because I think this is also an interesting topic where I would like to hear views from Tarun and Iqbal. But just wanted to share some two observations that I had. The one that Iqbal says I think is very, very important, and that is the connectivity link between East Asia and West Asia, or the Middle East, or however we want to call it here. We see exactly the same phenomenon, that these regions are becoming more and more integrated, and that we can also see that there's strong interest from the different pools of capital to actually invest in the other region. So when we are doing both private equity deals, but also lending, where we are then trying to organize a syndicate, we are working, for example, with banks here in East Asia to actually finance deals in the Middle East. We just announced, I think we are backing a fund, which is a joint venture between Indescorp and Aberdeen Standard Investments in the Middle East, where we are also joining forces with PIF, for example, in the region, but at the same time working with sovereign wealth funds here in Asia, to think about investments in the Middle East, and then vice versa. Other deep pockets of capital in the Middle East to finance deals in East Asia. So I find that a very interesting observation that I fully share. The second one I just wanted to briefly mention, I heard from Tarun and from Iqbal both the importance of sustainability, impact, ESG. Iqbal mentioned PRI. And just the quick observation here is that I'm very pleased to hear that, because I think it also demonstrates that these discussions, they're becoming really the new normal. There was a time when you only mentioned these things on dedicated ESG panels, but I think now there's a wider recognition that this is actually part of the fiduciary duty of managers, and that's simply good investment. So I just wanted to share that because I'm fully aligned here. Now on these secular trends, and we actually have a clear view that Asia, as we see it, we talked a little bit about India, we haven't talked so much about China, but then Southeast Asia is also a huge and diverse region with so many different countries that all have their kind of individual idiosyncratic challenges and opportunities. But I think we see indeed some broader secular trends in the region. One is clearly urbanization, which has taken place over the last years and which is poised to continue over the next years. We are like at 50% urbanization now. This is going to increase to 67% in 2050, which means basically 2/3 of the population here in Asia will ultimately live in cities. That provides huge opportunity, but of course also challenges that need to be addressed. Another one is clearly demographics, the shift towards a kind of larger middle class in the region, but also population growth in general. And then again, you have some societies which are aging rapidly. So all of that creates new demands for investments, new needs, but again, also challenges from a social perspective. And then I think you have the other trends that we have, I think, broadly discussed also at other opportunities. One is clearly technological innovation. I think Asia is really seen as the driver now in the emerging markets for technological innovation. And I think it's also becoming kind of an interesting spot for venture firms, entrepreneurs to actually be here in Asia to progress this. And sustainability, we mentioned that climate change, both the opportunity to invest in sustainability, because this region will ultimately be vastly impacted by climate change going forward. And with that, maybe would be happy to hear whether these are similar secular trends that the other panelists see. But I'm also happy to later on talk about the challenges that may result from these trends as well, and where we see the investment opportunity.
Yeah. Maybe you can also talking about the challenges. Maybe you can touch on COVID, the immediate challenge. Over the last 12, 18 months. How has that impacted your investment activities, significantly slowing down or what? And also the near-term outlook.
Yeah, so absolutely. So first of all, I think the countries have been impacted by the COVID-19 pandemic in various ways. Just to mention a few, I think, public players, governments have really stepped in fiscally to provide support to companies, to the private sector, and to their populations within the framework that they actually had. But I think they really stepped in, and I think they really now stress their balance sheets. So I think one challenge is that there are constraints now, I think, in the public sector, and that ultimately for new investments to go forward, which clearly need to take place, I think more private capital will be needed. And I think we will also see more efforts to think about asset recycling and privatization going forward. Another one has been that, travel restrictions, lockdowns, this all has actually led to delays in execution or on the infrastructure side in construction, but also simply, in disrupted value chains that we see in supply chains all over the region. So I think this probably needs to be, taken up again and gaining some momentum. I think for us as an institution, we have faced quite a challenge, of course, with COVID-19, because on the one hand, we have been impacted since we are still a new organization. That means we are still building client relations, partner relations. And we have seen that during a pandemic like that, where you can't travel, where you may not have people on the ground, that's very difficult. So everybody is piggybacking on the existing relationships. So did we. But of course, as a new organization, you may have less existing relationships than more mature and seasoned institutions. On the other hand, I think the flip side here is that when you are a new organization, you are quite flexible, right? When it comes to new work arrangements, when it comes to remote working. And so I think we actually weathered the crisis relatively well by adapting quickly to this kind of new normal, with most of our workforce being scattered around the globe, and yet being able to actually take decisions and to do what we are supposed to do, which is helping our members and our partners to get through the crisis and provide them with financing and advisory services as much as we can.
Got it. And maybe, for Iqbal and Tarun, please feel free to comment on these two topics. One that's, Thomas just raised secular trends that you see in your specific geography. The other is, more immediate, the COVID impact. Has that really, significantly slowed down your deal activity, your allocation activity, and what's the near-term outlook? So those two, any of you, please feel free to elaborate a little bit.
Okay. So I think I agree with Thomas about the impact of COVID-19, and different countries have responded to COVID-19 in different ways. We find in our region governments which are competent, focused on the welfare of their citizen. They are not ideologically driven, but driven by competence and integrity and building a better future for their people, have responded very well to COVID-19. All the countries have tried to pump in liquidity by either drawing down their reserves or printing money if you are lucky enough to do that. But the issue is you can create liquidity, but you can't create solvency in an economy. Solvency happens when you have got good governance, when you have got business design innovation, when you have an alignment in a strategy. What will you do for the SME sector? SME sector has been decimated by COVID-19 across the world. Some countries have responded better, some have not. So there are huge opportunities which will emerge as a result of the budget deficits. For a long time in both East Asia and West Asia, we have talked about PFI and PPP initiatives. Now these have become pressing priorities for the governments to be. And therefore, there will be huge opportunities coming in. And also the technological innovation, the digitalization, the tech innovation, the business design innovation is going to create a group of companies which were historically analog, but they will become fast digitalized and therefore more successful. So we see a lot of opportunities emerging from COVID-19.
I think if I could just chime in, Weichou, very quickly. I think Thomas and Iqbal have captured most of this. I'd just like to maybe step in and sort of explain this from, let's say, the value chain of investing. I think clearly on the sourcing side, there were challenges, right? Which sort of go through the fact that you couldn't travel. And, we as an organization are fairly lean across and dispersed across the world in different offices. So I think just the fact that we've been around for some time and had those relationships to sort of fall back on as continuing to do that sort of business with existing partners, that exactly is what Thomas mentioned as well. That I think was a big advantage for DG. But if you sort of look through going forward, deal closure was clearly difficult. So if you look at it on the direct side, as I mentioned in my opening remarks as well, just the surge of liquidity somehow happened to translate into a buoyancy in prices very, very quickly. So you could clearly see the pain sort of translate through the P&Ls in your portfolio. But on the listed company side, for instance, valuations just sort of had a complete V-shaped recovery, if I can call it that. And it was remarkable in that sense that on the direct side, the expectations never really went away as much. So that was one. Deal closure was difficult. Even through the funds that we work with, we saw the same sort of trends play out where, the pipeline, the advanced pipeline, let's say, completely got elongated. Some of those did close, some fell through. But what we also saw very interestingly is having slight more openness as this pandemic has gone through in funds wanting to back, let's say, companies that they've backed in previous fund lives, right? So we've been traditionally very opposed to something like that. We've loosened that a little bit, knowing fully well that it's just hard to go into the market and seek new relationships. So if you can already deploy some capital towards something which well you've partnered with in the past and all the other hygiene factors checked through, we've been more open to that. So I think that has been one fundamental change, I should say, in the way our business has looked at opportunities. Just maybe on from the NAV side, as I mentioned, if I could just shed a light on that. Again, most of what we saw is erosion in value in the last year has I would say, more or less come back. And part of this is probably if you sort of create the value bridge from what we saw, let's say 31st of December 2019 to today, not all of that is driven fundamentally by improvement in business operations. Some of it has. I think on balance, about 85% of the business in our portfolio has come through. Again, there's differences. The more technologically enabled businesses are probably doing better than they were before the pandemic. But a lot of this has also got to do with just the valuation marks being elevated from what they were at the time of entry.
Great, thanks. Let me take this opportunity to make an announcement. So the polling results just came back. So the question is, during 2020, your private market allocation to emerging Asia has A, increased, B, decreased, C, remaining the same. Interestingly, the organizer which was announced said there were 400 plus people who registered for the event. I don't know how many people really contributed to this poll, but it is interesting that 100% of the people who answered this question said they will increase. During not will increase during 2020, during the height of the COVID pandemic. So people have increased their allocation. Very interesting. Actually, it kind of confirms what I see on the ground. So in my role, I do deal with a lot of large public pensions, sovereign funds, large institutional investors. So I had thought at the beginning of 2020 that given the political tensions, given the COVID, so definitely you're going to see a big down year in terms of fundraising and capital allocation into Asia. Actually, that hasn't happened. If you look at the data, fundraising did dip between about 10 to 15%. But if you particularly look at large institutions, from Europe, from the Middle East, and particularly from the Middle East, really people felt the need to really increase their allocation, increase their exposure, and very often because of the talk of the political geopolitical tensions or the so-called decoupling. So it's an interesting phenomenon. So let me kind of again, if I can ask maybe Tarun, you can start. For the talk of a nation century, we have a few minutes, and also to the audience, if you have a last minute question, please send it to us through the chat box. So what are some of the one or two biggest risks you can see that would derail sort of the rise of Asia, or for Asia to achieve emerging Asia to achieve its potential? For so-called the Asia century. Some people say it's governance, but for you, what's the biggest one or two things that you worry about in your internal discussions?
Sure, no, thanks for this. Maybe I'm better placed to answer this from an India perspective. I'll let my co-panelists sort of come through. I think for India, the large challenges really remain the same. It is demographics. We have been talking about this for the longest time, trying to sell the story of the demographic dividend. I think increasingly as the years roll on, we might be actually building a huge liability for ourselves. Last checked, we were looking to create 10 million jobs a month to be able to just ensure that people have the right employment and the ability to sort of build a life for themselves and all of that. I think for India especially, and if you just think into context, the size of the population, you put through all the trends that you see in terms of digitization, automation, I think that for India is a huge challenge, and we need to be very cognizant of how we actually adapt to that So it's not to say that we close our borders and we don't allow the automation to come through. That will just make our firms uncompetitive in some way. But there has to be a humane approach to technology and automation in making sure that we are able to balance the need for job creation. I think that's one. And just related to that, if you think about what Thomas mentioned, aging populations, we're not that far away. If you actually roll the clock forward about, let's say, 15 years, we'd also be in a position where clearly the average age of Indians will start to rise very quickly. And before that, we've got to be able to use this dividend and leapfrog, let's say, the way China has, into a different plane. And that for me is I think the one big risk, coupled with the rising inequality. So COVID, again, I hate to bring this up again and again, but just the K-shaped recovery that you've seen, that is a big risk.
Got it. So 40 seconds, Iqbal. So what are the one or two biggest risks that you were concerned about?
Geopolitical risk between India and China. This will impact the supply chain logistics. India and China were getting very closely embedded as an economy, and that's something which I worry about. The clash of ideology versus pragmatism. The rise of ideological governments is bad news for any country, any region, and we do have so many ideological governments which are being divisive. And the third thing is really COVID-19 has created a huge emotional trauma. So nations and the world has to come together to create emotional resilience, to build and fortify so that people can come together to make a better world for all.
But it is a complete agree. It's a big concern, but also, I really share your view on what needs to be done. So, Thomas, you have the final word. Politics must come up quite a bit.
Yes, no, I agree with everything that has been said. I think these are the major risks, but let me also mention one that I think, the World Economic Forum is always putting on top, and I think for Asia as well, it's going to be one defining risk going forward, and that is simply climate change, both in terms of on the investment side, where we invest right now, especially as long-term investors, and to mitigate the risk of investing in something that could become stranded assets. That's the one thing. But the other one is that it's actually quite worrying to see how little capital is being spent on climate adaptation, and so how unprepared the region is for the things that will ultimately and eventually come. We just don't know how much and how hard. My sense is that this will change going forward, because right now there is a focus on mitigation for very good reasons. But the moment where we are losing a little bit the time and the opportunity, we probably shift more allocation towards adaptation. So I'm confident that this will happen. But for the time being, I feel like the region is somewhat unprepared in what's going to happen going forward.
Well said. Thank you. Thank you so much, all of you. So I'll hand this over back to Josephine.
Thank you very much, everyone. Great start to the day. I really enjoyed the discussion. Thank you, Iqbal, for referencing SMEs and the difference between solvency and liquidity. Some really good insights coming out from that. Thomas reminding us about climate change. And Tarun, yes, governance is so important for all of these businesses. So I hope you all enjoyed that.